Up, everybody? This is James Lowry and Future Focus Podcast, where we're going to talk about real life situations that really matter as it pertains to finance, credit, buying a house, retirement, you name it. We're going to cover it all, but we're going to really get into the meat and potatoes of it. So, Anthony, I know you and I have been chopping it up for a little bit, but I never really asked you, what was your first experience with credit where you realized, like, what is this, and that it mattered?
So, James, not to cut you off, but I'm your man, Anthony Smith, and I'm sitting here with my big head counterpart, a.k.a. Heady Monster, my man Wilson. And getting back to your question, of course, the first time that you realized, or the first time that I realized that credit was important was when I went to go and get something that I couldn't necessarily afford with, or to buy outright with cash.
Okay.
And they asked me for my social to run my credit.
What was that, though? What were you looking to buy? Curious.
I think the first big ticket item that I was going to buy was a street bike.
Okay.
Yeah.
Okay.
I got turned down real quick. Real quick. They wasn't playing with me.
Right.
It was a no-go. Under my name.
Right.
Not because I couldn't afford it. You know what I mean? I think I was like 19, 20 at the time.
Okay.
Credit just wasn't there. You know what I mean?
I'm sorry. Had you heard previously? I mean, had your dad or your parents give you any of that information?
Now I'm going to tell you guys like this. I had a friend, or have a friend, that goes. His name is Elvin. We call him Els. His mom preached credit to us since we were like. I was 14 when I met Elvin. Probably like 14.
Okay.
And Elvin was a couple years younger than me, so he was like 12 going on 13.
Okay.
Credit, right?
What was she saying about it specifically?
You guys need to make sure your credit is good. And right now what I'm telling you, Anthony, is go see if one of your parents can piggyback your name right now under one of their cards to start earning you credit without you having to earn your own credit.
Right.
Because you can't even get a credit card right now.
Right.
But your social and your credit score can be being built by someone else, right? Now, this is the knowledge that she's throwing, but she got a cup in her hand. She's doing a little sipping. You know what I mean?
Yeah.
And I'm not saying that as a kid, I heard it, but it didn't resonate until I got denied on my street bike.
Right.
And he went to go get a brand new Lexus, no money down.
Right.
It was a
right. There's a big.
They turned me down on 10, and that was like 45 for the IS 300 at the time. He had the gray one. It was brand new. It was the very first IS that came out. My man's was in it.
Yeah.
02.
02, 03.
Nah.
Slick body.
Gunmetal gray.
Yeah.
With the little slapstick, the little shit, all that.
Oh, he was big man.
I you know, it was, yeah. You know, so to be 16, he was 16, 17 in a Lexus.
Oh,
yeah,
flexing on him.
See, and that's the power of credit, which is amazing, right? Because your first experience with this was, like you said, you're going to buy a street bike that's 10, 16,000. You know what I mean? He's buying this, and you're like, wait a minute.
And this wasn't no new street bike, you guys. I wasn't in there trying to get the new joint. You know, I already knew I couldn't afford the new boy. I'm trying to. It was like 6 to 10,000. It was no more than that.
And you're thinking this is slam dunk. I'm gonna go in here. I got it. Like, nope.
Ain't too easy. I'm like calculating what the payments could be. I don't even know how I'm figuring out math. Like, didn't know shit about an APR.
Interest rate. What is that? What is that?
I'm just going in. I'm like, man, I'm making $800 a month. The payment on this bike can't be nothing but $150.
Right.
That's the only bill I have. How they gonna tell me no?
Yeah.
Oh, they told me no.
Yep. And you know what's crazy about that is when that comes into play, and how credit works a little bit is experience, right?
Yes.
They call it credit on wheels, right? So, you know, your installment, we'll get in that a little bit, you know what I mean? But the credit on wheels is so much different, because if you have no experience making that type of payment, no one's going to give it to you. Even if you got half down. You can put 50% down on that bike, and they're not going to give it to you. You know why? Because they don't think you're going to be able to pay it, because you have no knowledge.
Yes.
You have no experience doing that, right? So they're thinking, probably especially being a man of color, you know, they're thinking you're just going to drive off and never come back.
Hey, I was about to pull a Willie up out that thing.
And never come back.
The funny thing about the whole story is, I had no idea what I was going to do if they approved me, right? I went in there solo.
Okay.
But I knew I was leaving on a bike. I'm like, if I got to leave this car here and go, floss to the homies, go pick somebody up and come back, we're going to come back and get the car. But I'm pulling up on the bike. Oh, yeah, no. My
right out the window.
Dreams shattered real quick.
Real quick.
Just done.
It hurt.
It's done.
Yeah.
It's done. Well, that's cool. And how about you, Wilson?
Funny enough, for my first time, it was trying to get some camera stuff.
Okay.
And I was lucky enough that my mom did that. She actually did put me on one of her credit lines.
Okay.
Early on when she got on it. That was, 5-6 years ago now.
Okay.
So I was lucky enough that when I got my little credit line, they got me a cool $4,000 to start with, and I was like, wow. I was like,
they gave you 4Gs?
I was like, hey, y'all trusting me like that? I was like, hey, my mom did me good.
That she did.
Yeah, she did.
Thank you, Mama.
Right off the bat.
Yeah, thank
right
you,
off
Mama.
the bat.
Appreciate you. Appreciate you.
I really appreciate it because it got me, to start off and be able to get some camera stuff real quick off the
Right.
ground.
Yeah.
But what did you know about it? Like, what was your understanding of how credit worked and how do I manage this?
So, in academia, there was it's like a social experiment that I found that would analyze, was a good analogy for credit, which was like credit is pretty much financial institutions' way of being able to see how much we could trust you.
Yes.
The same way that we go out and see how much we could trust people in real life, the number just correlates how much we could trust you and how much money we could give you.
Right.
And
Based
that's
on
pretty
evidence.
much, that's all I knew, and up until now, pretty much.
Yeah, see, and that's what we got going on in this world is a common misconception of what credit is with a lot of people. Most people think it's just free money, right? And our system that we're in, society, the powers that be, whatever you want to call it, have programmed us to think this way, right? Because if we understood how it really worked, we wouldn't do it.
Correct.
We wouldn't do it the way that we primarily do it, right? And I'm speaking generally. I'm not talking specifically because, this is very rare. We got 3 men of color here. My experience of it, and I'll share that in a minute, was nothing like your guys's, right? So for the fact that your mom helped you out and your friend's mom schooled you a little bit,
right,
that doesn't happen really much anymore. And it didn't happen back then, right? So the only ideas we have of what credit is what? What we see.
Yeah.
Right? Homeboy got the Lexus. You start talking to him. He's like, oh, I got this on credit. But he don't explain to you really what is going on.
He didn't even know what was going
right.
on. He was 100% going under whatever his mom said.
Right.
He was running with it. And it was working.
Yeah.
You know what I mean? And still to this day.
Clearly.
still to this day, my man Elvin is 37, owns 3 homes in the high desert.
Okay.
And is doing extremely well for himself.
Right.
He has 3 homes up here, 1 home in Baldwin Park, and it's not all because of what he did. His mom left him a couple houses, but he had 2 houses prior.
But he knows how to manage it because of what his mom did. See?
Well, the great thing about it is when I tell you this man has 4 houses, 3 of them are paid off.
See,
Ooh-wee.
See, and we got to talk about that too, because that's not always a good thing. It's not all. A lot of people think it is, but
really,
yeah.
Oh, okay.
So we're gonna break that down.
We're gonna break that down.
Real quick for me.
We are gonna break that down. But
I
that'll
looked
come
at him
later.
and I was like, "Oh, you rich,
rich.
You holding about $1.5 million, man.
Right? You know what? Because true wealth is measured by real estate. Really, you know what I
Right.
mean? The liquidable assets that you have in real property. And whether it translates to residential or commercial, you got a commercial building is the same as a residential building, right? It's just worth more money and has some different regulations on it, But, it's just, we started chopping it up with all this because ain't nobody talking about it. Not talking about the real meat and potatoes about how credit, finance, so many that you'll see, guys. Like it's gonna get a little bit crazy, but we're gonna really give you the nitty gritty. And that all really starts, like, I'm going to start with my first experience with credit. I met my wife, and we were looking for an apartment out here in California. I'm from Vegas originally. But we started driving out here looking for an apartment and all that, or a house to rent, like 2 months before we moved out. And so obviously they got to run your credit. And I really didn't know a whole lot about credit at all, right? Because, I grew up in the streets. Like, we barely could afford groceries, much less credit. You know what I mean? Like, my mom she didn't really know. Maybe she did know about credit, but she never used it because we always paid cash for everything, you know? And my first experience with credit was, like I said, when I came out here, I saw my first credit application from the landlord. Actually, he showed me because he's like, I can't rent a house to you or this apartment to you because your credit, you got unlawful detainer, you got child support, you got collections from trash collections and out here in California. Yeah. I'm like, wait a minute, I just moved out here to California. How do I got collections? I'm a junior. I'm a junior. Oh,
I know the junior.
No, I'm a junior.
Hey,
right?
That's right on. We looking for him.
We looking, right? So you know what? Like, you know, and this kind of compounds a little bit. I'm not going to get too deep into the situation with me and my pops, but like, on top of everything else, now it's time for me to do my thing, and you didn't mess my credit up, right? Yeah. So I can't do this for my family. So,
and that's something that's so common.
It is
so common. And the story that you told, my girlfriend, same like scenario, but she's not even a junior. But they were using her name as a kid for the lights, for the utilities. Yep. You know what I mean? And of course she's not going to have any idea. And that is a commonality of something that, unfortunately, you can't even predict something like that.
No, you can't.
You ain't going to know until you go, you know, like you said, go get an apartment or go to purchase your first car or whatever they run your credit for the first time. Then you're like, the hell?
Exactly.
In 93, I was like 4.
Thank you. And the crazy part about that too is okay, I'll give anybody the benefit of the doubt, right? Especially your parents. It's not your parents' intention to ruin your credit.
Right.
They just ruin theirs so bad they gotta use let me just get yours for a minute. But look, life happens, right? Whatever, you lose a job or something goes down to where you can't get it on your own, you need help, right? Yeah. So let me get my kid. I'll take care of it later. Yeah. But that never happens. Here's the segue to that too is the aftermath. Like when I saw that on my credit report, I had no idea what to do with it. What do I do?
Yeah.
Like I got an eviction in California. I can't rent. No one's gonna rent to me with an eviction, and I got a new family, my man. Yeah. You know, on top of moving out of a place, I had no idea where I was, no family out here, no guidance, no help. So, you know what? What I did was this was before the internet was real big. Like you couldn't just hop on the internet and Google how to fix my credit score. You know what I mean? Yeah. So, by the grace of God, man, I started asking. Well, first of all, I called my dad. I called my dad, yeah, because like, really? And so I started digging, and by the grace of God, I was in the financial industry at that time, right? So that was my first eye-opener to start asking questions. Gotcha. How do I fix this? And the cool part about it is, and anybody knows this who has had negative impact or negative items on their credit, it's easy to get on there, but it's an act of Congress to get it off, unless you know the right people and you know the steps to take. But you know, I don't know about y'all, but in my life, I haven't had a lot of people that had my back and that guided me and showed me. I had to do it pretty much all on myself. So when I started asking questions about credit and whatnot, that's when everything unraveled to me. It started,
Start making sense?
It started making sense. Okay. But still, I had to get the stuff off, though. You know, whether it's making sense or not, what do you do with what you have?
You still need somewhere to go right now.
Right, because I mean, an unlawful detainer is a document that's recorded with the county that says you did not pay me my rent or you damaged the property or whatever the case may be. So, but what's the step? Like I started with basics. How do you know this was me?
Yeah.
How do you know it was me?
Clarify that.
Because where's my signature? Don't I have to sign? You know, I'm pretty young at this time too. You know, don't I have to sign a contract or something that lets you know that? Like, well, yeah, we have your signature. Show it to me.
It's not my signature.
Show it to me. Not my signature. So
when that happens, are they able just to pull it off? Or does it just get transferred? Or do you go in there and drop a dime on Pops?
Yep.
That's exactly what you got to do.
That's the decision you got to make. You know, is it you or them?
Because I told on Pops.
Yeah, see?
This nigga, I mean, excuse me. Hey, my man's ran up a hospital bill, you know what I mean? And I went to go get, this was my second house that we were buying, and a hospital bill popped up.
Oh, classic.
I'm like, my medical good.
Yeah. I ain't been in the doctor's good. You know?
And it was pretty much the same situation. I called my dad and he was like, oh, yeah, man, I forgot about it.
Oh, my bad.
I forgot about it. Oh, come on, man.
Went in there, took care of it. They had him. The hospital in this case had him sign a document that they had, so it has to be something that happens common because there was no problem. The lady came back real fast with this document for Pops to fill out. It wasn't like she went back there and had to look through some stuff or print something out from somewhere. She came back real quick. Okay, sign here, take this, boom, and then they gave me a letter to give to the realtor that was helping me, and he was able to send that in and get that taken off.
Absolutely. But see, and that's one thing I wanted to get to too is the aftermath, right? Is how we clean this up and what does that look like, especially with negative impacts on your credit. But the cold part is, before we get onto that, is child support, right? Mm-hmm. When I had child support on my credit as a collection, my daughter was not even a year old at this particular time, right? So I hit up the county. I'm like, I really wanted to know how did this attach itself to me when my daughter's just born? Don't you verify who the mom is? And like, I had questions, right? They're like, no, it's only filed under your name. The county told me that your child support order was filed at that time. This was, 11, 12 years ago, is that it just filed under your name.
Right.
And then when you call in, if you got an issue, we just work it out. Try to figure it out. Yes.
They just put your name and it's just like.
And attach itself to it.
Looks like that should be
Wilson,
good.
Right. We're taking your money.
Hell nah.
For no reason. No. And then garnish your wages. And then half the time you don't even know. How do you know?
Do they even verify? Like, do they send you a letter like, hey,
no notice, no nothing. Just even child support on credit.
If they do send you a letter, whatever address they have, no matter if you lived there 10 years ago.
Oh, no.
They just need the postage stamped on it. That's it.
They send it. No matter if you receive it, there's nothing. I was lucky enough never to have to go through no situation like that. But I had a bunch of friends that, we was frequenting at the child support office.
Yeah. And
it got me wrong.
It's not a good look, it really isn't, especially when you have legal, judgments and liens on your credit is a different story than having a late payment or a medical collection. You know what I mean?
No.
Because they're recording this document with your name on it in county records, right?
So what's the severity? How when it goes on your credit, what levels of severity go?
What's the severity, and also does it ever fall off?
Yeah, just time wise, or do you have to actively be working it out?
Well, it depends on what it is, right? So there's different types of
child support's not going away.
No,
let's say a lien or a hospital bill.
Well, a lien is in the same category as child support, believe it or
really?
not. Yeah, a lien and child support are relatively the same thing. Meaning, see, a lot of people think a lien attaches itself to real property. So like a house, a car, motorcycle, RV, whatever. Real property means something tangible that you own, that if you don't make the payments, they're going to come take it back from you, right?
Got you.
Yeah.
And so a lien, like child support, is when it's done through the state or the government, it's really difficult to get off because you have to be able to prove without a shadow of a doubt that it is not yours. But yet they didn't prove without a shadow of a doubt when they put it on your credit. Yeah. So there's different judgments, and liens are the worst.
Okay.
As it pertains to credit. Okay. They're the worst because that means you blatantly defaulted on debt. And they want their money. They've already gone to court. They've already talked to the judge. That's how they're illegally file a lien against you. Right. And that's what I meant to touch on that. That's what I was talking about, was a lien attaches itself to the person itself or themselves, right? So whether you own a home or not, if you don't pay a bill and they go to court and the judge awards them this lien, no matter where you go, it's going to follow you. And a lot of the times you don't even know you have a lien. Liens don't pop up sometimes for years. You could own a house and have a $20,000 lien, but see, you're like, wait a minute, I know what that was for. That was for $3,000. It wasn't for $30,000, but they can charge you all the interest over time based on what the judge awards them as well, and it's wrong, right? But that's why we here today, because we gonna talk about
future focus
podcast, right?
And this is one that you guys want to chime in
how to navigate
weekly. We're going to be doing our best to get all of this information chopped down and sent to you on various platforms. But the long form is going to live here on YouTube.
Yes, it is.
We're going to be on Spotify soon, Apple Music soon, Amazon, wherever you find your local podcast, that's where this podcast is going to be vocally. And we're going to do our best to get it out there, video-wise as well on all the platforms. But
all platforms.
Future focus, man, remember it.
Future focus. And it's gonna break down all of the real information, right? The real topics that, people don't want to tell you about or they want to charge you for. This is what we need to do as human beings is have each other's backs, right? We don't do that enough, especially in specific cultures. And our culture, the Hispanic culture. I can't really speak on many other cultures that I don't have experience with, but it's just a human nature to only do something for somebody because you're going to benefit from it, right? Because you're going to reciprocate something from them that's going to only benefit you. And that's not the way things should be, right? Because if we stand shoulder to shoulder with one another, there's so much more that we could accomplish, because what I'm good at, Anthony's not good at, or Wilson's not good at. What he's good at, I'm not good at. But together, we can put all this together and hold each other up through all this, right? Because it's going to get worse here too, guys. In the industry, as far as credit and finance and the stock market and whatnot, there's a storm coming. There's a big storm coming. But, whether that does happen or not, we need to make sure we have the proper arsenal to fight, right?
Yeah. Correct.
We got to make sure we have the proper arsenal to fight.
So, what will be the first advice that you would give to someone that's getting ready to, like my daughter, she's just turned 18. What's the first things that you could give a young adult going out there into the world right now? Kind of, and she's not by herself, of course,
right?
But she's by herself because on a day-to-day, I'm not looking over her shoulder.
Right,
I'm
but
not
she needs to think for herself anyway. Daddy ain't always going to be there in her ear like conscience telling her what to do.
Exactly.
So she's got to have the proper tools and equipment to be able to process whatever information that she needs to make a decision. And that's the thing is so many people try to learn about something and jump to the end chapter instead of understanding the fundamentals. So for your daughter, for anybody that's starting out with credit, no matter what the age is understanding the fundamentals. What does that look like? How does credit work? Mm-hmm. What are trade lines? What does installment mean? What does revolving mean? What do all these things mean?
The one thing that I told her was stay in her lane, right?
Yes.
You're going to a school with a bunch of rich kids, and you're not that. Daddy's not that.
Good advice.
Right? So stay in your lane.
Good
Don't
advice.
go
Don't
grab
and
a
nor am I
bunch of
trying to
credit
be.
cards. Yes. Don't go grab a bunch of credit cards and max them all out, because they're gonna give them to you at $200-$300 a piece. You're gonna start getting these credit cards with these ridiculous.
Brother. I gotta chime in on this. That's a great point. Notice he said trying to keep up with the kids up there at whatever college he's going to because they got money, right? But that's the human condition. That's why most of us have credit today, is so we can keep up with everybody else, right? When you see most people that have razors and boats and nice cars and RVs and nice houses, they didn't buy that cash. They're trying to keep up.
Keep up with the Joneses.
You're buying money, buying things they don't need with money they really don't have, right? But that's the thing, is so many people, so many of us, and I'm guilty of it too, or I was guilty of it at one time, is I want that. Let me put it on credit because it makes me feel some type of way. Not that I was trying to keep up with anybody, but it makes you feel some type of way. Yeah. Or you like the way that other people
are going to
react to you based on what you have, right? Because
rolling on the wrist.
Exactly.
Hey, so when man's got this Lexus, right? I'm talking back in the day. He was him. He was pulling up. I'm hollering at everything from the passenger side. He wouldn't let me drive this thing. I'm telling you, we've been boys at this time for it felt like forever, because we were with each other every day, day in and day out.
Yeah.
But we had only been friends for probably 4 years at that time.
Okay.
But coming from being a teenager to now coming into young adulthood, that was the first time that I kind of realized, money ain't everything. You know what I mean?
Nope.
Because I'm still bagging chicks over here. No problem, out this little bucket. You know what I mean?
That's right.
My Honda was smoking like a mother following that Lexus. But the girl in the passenger seat was bad than a thing.
That's right.
What? For me, that was the first thing that hit me because I was like, damn, man, how do I get me a Lexus?
Right.
You know what I mean?
Right.
Like, mom's is up. Mom's ain't even got a Lexus.
Right.
You know what I mean? She had a Volvo. It was cool. It was clean. Pops had a couple different cars. But at the same time, I knew that I couldn't even go to them.
Right.
Like, when you say cosigner, right? And That's like a bad word in my community.
It is. Co-sign.
Co-sign.
What? You better get out there and do it
I don't know you like that.
You ain't messing up my credit.
The only thing that tops a co-signer is a baby mama. Those two things in this community run hand in hand. You know what I mean?
Yeah.
And I feel like those are debts that you just can't run from.
That's it. That is exactly.
They hunt you down.
They do, and especially if you don't manage it, because once you get in the weeds, it's never getting out. I mean, not never.
Feels like you can never get out.
It's very
for sure.
difficult, right? Because I mean, we all need help in this world from time to time, right? And most of us are not fortunate enough to have somebody to fall back on. You know, like we were just talking about. So if your credit's wrecked and you're trying to get out of a hole, it's just going to get perpetually worse and worse and worse and worse. So I want to go back to what you were asking what would I tell anybody or a young person or again, anybody that is starting out is to understand the fundamentals, right? So, you know, first of all is how is the game of credit played? You know, and there's two different types of what there's called trade lines on a credit report. And a trade line is essentially just a line of credit on your credit report. So for instance, if you went and bought a vehicle and you got approved for financing on that vehicle, that becomes a trade line on your credit. If you opened a Capital One credit card and had a $3,000 limit, that's a trade line on your credit. Now the next thing is to understand the two different types of trade lines, right? So there's installment. An installment just essentially means, and I'm going to break this, I'm not going to get complicated on anybody. I'm going to break it down to the way that I understood it. Yes. You know what I mean?
Yes.
And so an installment trade line is just basically something you took a loan or you were given a loan for, right? And they're using that particular item as collateral. Let's say a car, for instance, right? You put down the car's $40,000. You put down $10,000. Mm-hmm. Now they say, okay, based on what the car is worth, we're going to loan you the other $30K, and we're going to place a lien against that vehicle. So when you get when you see the title of your vehicle or look on your insurance, it says loss payee.
Yes.
Loss payee is in the event you don't pay for that vehicle or something happens to it, it goes to them automatically. Now, they'll usually take that vehicle to auction, sell it.
That's when the repo man pull up.
Exactly. You don't want all that, you know what I mean, with the truck in the back.
Yeah, they good, bro.
Man, they really good. They're really good. Yeah.
I had a roommate, right? I had a car get repoed, but I don't count it as my repo, right? It didn't. It hurt because it was under my name, but the car was never intentionally for me, right? Besides that, I just want to put that out there. I had a repo. You could come back from a repo, right? But we did everything that we could to block my boy's car in, right? He comes in, it's four of us living in the house. He's like, yo, ain't made the payment in like 3 months. You know what I mean? I called, I made a deal, but that was last month.
Yeah.
They owe me right now. Yeah. So listen, everybody basically blocked this car in. We woke up the next morning, that Jones was gone. Everybody's car was moved out of the way strategically. Wow. Like they nicely parked my ish up against the curb. I see my car out the window. I was like, didn't I put my shit in the driveway?
Wow.
These repo men
they get creative. Tetrix
they have
on the car.
Quiet. I'm talking. I'm 2-story house. My window is looking down on the driveway.
Never heard of him.
Nah.
Sneaky. Like a ninja at night. And the stealth at night. You know, that's a funny story. When I first moved out here, I worked down in Rancho Cucamonga, and there was like a 4-story building we worked in. And on the same floor as us was A&L Financial. So anybody who knows A&L Financial, which actually became Westlake, anybody from where we from that went to go buy a car who didn't have great credit had to use Westlake Financial or A&L Financial in order to get a vehicle, right? So on the 4th floor, I used to chop it up with the manager all the time, and he's like, James, come over here, check this out. And he's like, look down there. So I saw the truck circling the parking lot, right? And he's like, yeah, I had this fool come in and pay like a partial payment, but I had no intention on keeping his payment or letting him keep his car. I just needed to get the vehicle here in the drive, in the parking lot. So beware. If you working out payment arrangements and they tell you to come in and bring a payment, don't drive in that car.
Very
You know what I mean?
That
Take
was
somebody else's car.
I've never heard that one.
Hey,
the
that's
classic. That's a classic cops move
Yep.
when they call everybody
Yeah.
that has warrants.
Yeah.
And tell them they're gonna win something. We got a TV for you.
Oh,
and they just
man.
load them up,
Which is
everybody
real,
in the
by the
room.
way. That's real
I
talk.
never heard it in a repo standpoint. That was great.
Dirty,
But
though, man.
That's
Dirty.
probably where they got that idea from.
Dirty.
Yeah, that's
I was
dirty.
more mad at him though, because he's supposed to be one of the homies, and he snitched on somebody. Like he had him come in and take the man. That was wrong.
Damn,
that was wrong,
like
man.
that.
Dirty
You can't
move.
do that. But hey, look, you got to feed your family. You got to do what you got to do.
Here on Future Focus Podcast, the one thing that's going to be different from the other financial institutions that you guys could be getting your financial knowledge from, no matter where it's from, on YouTube, on Spotify, wherever you're getting that information from, we're real people. We're going to be throwing in our stories.
Yes, sir.
And, these are real situations because we want you guys to know that this stuff really happens to everybody, and it happened to
Everyone.
us. You know what I mean? So
Yes.
some of these stories you guys may just get a good laugh at and never be able to relate to. Oh, snaps.
Lost the audio.
We lost audio. Hold
You
on.
lost the. There you go. That was what you lost.
We still
2-second break, guys.
Please stand by.
Difficulties. Yeah.
We are back.
All right.
All right, so we want you guys to be able to relate. You know what I mean? So that's why we're all of technically different ethnicities, different age groups, because we want everybody out there to somewhat be able to relate to what's going on, to be able to help their financial situation, and you guys to be future focused. You know what I mean?
Absolutely, and you're not alone. I mean, we spend so much time just reacting because of situations that happen. But we're never proactive that much, because a lot of the times we don't feel like there are people there or I'm embarrassed, right? I don't want to tell anybody I got a 470 credit score.
Right.
I don't want to tell anybody they about to come get my car, right? So a lot of times we let pride stand in the way of just putting ourselves out there, man,
Yeah.
and that's what we want to let everybody know is that it's you're not alone. There's always somebody that's going through it, sometimes worse, sometimes the same, sometimes better. But anyways, at the same time, you got to look at your situation and have the proper tools to know what you can implement quickly to get yourself out of the hole.
Right.
Yeah.
So right now we're kind of expressing and telling stories. We want you guys to get a feel for who we are as individuals.
Absolutely.
You know what I mean? You guys can feel that we're normal, just like you guys on the other side of this lens. Sometimes James is gonna get nerdy. Y'all gonna see the pop up
Yes.
with all the numbers,
Yes,
and
you will.
that's gonna be on this page too.
Yes,
But
you
sometimes
will.
we just gonna be in here kicking it, just
Absolutely.
shooting the shit. When James came up with this idea and pitched it to myself and Wilson, we loved it. You know what I mean? Because everybody needs to better their financial situation, no matter what it is. If you think Jeff Bezos is at home right now, not thinking about the next company that he's trying to own, not for the billions, but just to make change in the world, to better a financial situation for, man, his great 10 times great, 20 times great grandkids down the line, because a lot of the things that we do today affects our children of the future.
Right.
So
Future
you gotta
focus.
stay future focused.
That's it. And I'm gonna bring this home with saying this as well, is we really need to start having each other's backs. And what I mean by that is we don't, not even each other's backs, just really our own backs too, right? We don't take an active involvement in our life a lot of the times because of just situations that happen, right? We're so caught up with working the overtime, putting in those hours, just grinding because we've gotten ourselves into so much debt, right? Maybe not everybody, but you got rent, you got bill, you got car payments, the kids, God forbid you have a kid in college. In college is not, I have a kid, I have a daughter in college, I have 3 children, a 20-year-old, a 15-year-old, and a 10-year-old. And my daughter's in college right now, and by the grace of God, man, am I able to even, I mean, coming from where I come from, to even think about putting my daughter through college wasn't possible. It wasn't, and even because of my own actions in life. I mean, it took me a long time to get my head out of my culo and start realizing like what is really important, especially with credit. Credit was the biggest thing, right? Yeah. I mean, it'll put you way ahead of the game a lot quicker, but you know, it's time for the narrative to change, right? It's not so much about black and white and Hispanic and Asian and all that anymore. It's the rich and the poor. That's how I see it anymore. It's not about, it's the haves and have-nots, right? And the reason why the people, and there's so many people, and if you check it out, it's really divided right now. Like it's 50, like there's a 50%, I think, of all Americans are rich, you know, or above the median income level, you know, and then half of them are below it, right? And but the half, we're gonna continue to stay down here if we don't educate ourselves. But I was like you too, where when I go looking for the information, it's either too complicated or so overwhelming, or one person saying one thing and another person saying another thing. I don't know what is right and what is wrong, right? And so, you know, you just jump in and then you start making mistakes. Some of us make worse mistakes and make the situation even worse than what it was, or we educate ourselves and we gain that knowledge and we start seeing what that looks like coming out of it.
How important is it for the people to get out there and start worrying about their credit now? Because I would say 8 of 10 people only check their credit score when they want something.
Right. Hands down. You have to be proactive, you know, and that goes back to this. Will someone talk about the trades again? And actually, let me put a period behind the end of this sentence is, you know, what we want to do here at Future Focus is obviously give you the information so you can arm yourself and change the narrative, right? We're going to give you all the carrots, all the fruits, all the vegetables, all the meats, anything you're looking for to be able to make any move laterally in any situation, whether you want to open your own business, whether you just want to maintain your current situation, whether you got a kid getting ready to go to college, maybe you want to buy a house, who knows, whatever the situation is, we're going to make sure you have that information so you can move laterally within that space. So when we come back to what types of trade lines is, and well, excuse me, let me start with this, is the fundamentals. The fundamentals of credit is understanding the trade lines, number one, and how it works. So installments, we already talked about that, right? So again, if you don't make that payment on that vehicle, they're going to come take it. But how it pertains to how your credit score works is, as long as you're making payments on time, your credit score relatively stays the same.
Oh.
Relatively stays the same. But if you miss a payment, watch it go backwards real quick, right? But that's
now,
just how.
Once that is paid off, do you get that boost, or does it still?
Not typically. You'll see a minor increase in that.
So when you say minor, you talking 2-3 points?
About 5 to 10.
Okay.
About 5 to 10 basis points in your credit. So when I refer to basis points is just if you go from 5 to 10% high, or not, excuse me, not higher, but 5 to 10 points higher in your credit score is a basis point. But 5 to 10 maybe. But if you bought a car and you paid it off within a year, it's going to shoot right up. It's going to shoot up 15 to probably 20 basis points.
Now, does that matter if the amount of the car? So if I go buy a $5,000 car today and Wilson goes to buy a $40,000 car today and we both pay it off in the same time, do we still get the same boost?
Possibly. Well, you never know with that. That's what's kind of tricky with the because there's so many variables that come into play. And when Anthony was saying I nerd, you know, you're gonna get some nerding out. There will be some situations where that happen, but it depends on the overall situation of your credit because everybody's portfolio looks different. You know, again, Wilson's spending habits different than Anthony's, different than mine's. So depending on what your financial discipline is gonna kind of dictate how that affects you. You know, to answer your question specifically. But, you know, the best thing to do with installment trade lines, again, RVs, motorcycles, boats, jet skis, any tangible, or a house, obviously, is an installment loan. Student loans, believe it or not, are installment loans.
Wow.
Really?
And I'm still trying to figure out. I don't know
'Cause
everything.
I can't grab that.
No, you can't
it's
grab
not
that,
tangible.
right? And I
So-
can't take
That's
it
not
with
tangible.
me.
I can't take it with
It's
me.
it's an
I wish.
installment. It's an installment loan. But you know, installment loans aren't always just predicated on having real property, though.
Okay.
And we'll get into that another time.
Okay.
There's
We
only-
got to do like a little, like when James about to get nerdy, we got to have like the music come in.
like Beaker from the Muppet Show. You know, we had with the glasses on.
Hey, we got to do something real dope when James
Yeah.
is about to get into the nitty gritty for
For
y'all.
real.
It's gonna be fun.
So, you know, I don't even advocate even taking out loans on vehicles or any tangible items other than like homes and things like that. Appreciating assets. That's I guess the best way to put it. Don't take out loans on items that do not appreciate. Unless you're in business and you own a business and the business owns those items and can write them off on taxes.
Got you.
You see what I'm saying?
My
But
new Tesla.
again, we're gonna go back. Hey,
Hello.
Hey,
What's
almost had that Model X, man. It just wasn't big enough. It wasn't big enough. I mean, and again, I'm so blessed to be in that kind of position, but it just wasn't big enough for the family. And anyways, so you really want to focus on revolving trade lines.
So give us a couple examples of revolving.
If revolving trade lines are all revolving trade line by definition is like a credit card. Naturally, you have a limit, $4,000. You use that limit, right? Then you pay it back. What happens when you pay it back?
Slowly increases, no?
Becomes available to you again.
Yeah.
So it's revolving.
Oh.
Balance, pay, balance, pay. You know, that's how it works. Limit,
compared
balance,
to
pay.
trading.
Yeah,
Right.
limit, balance, pay. Really. So you have a limit. Then you charge it. That's the balance. Then you pay it. That goes back, increases your limit again, right? So let me give you an example. If you have a $4,000 credit card and you charge $300 on it, you have $3,700 left that you could charge something else on, right?
Yes.
So once you pay that $300, your limit then becomes $4,000 again, right? So that's just perpetual, you know. And it's most people in the world. What they do is and I'm kind of guilty of this sometimes myself, is it's a perpetual cycle, especially in the revolving. So Christmas comes along, you want your kids to have a good, you know, Christmas, whatever else, you know, you
Run
it up, then you spend a whole year paying it back down just so you can run it up again, right? Now, a lot of people consider, you know, credit to be like free money. Because it's beautifully designed, right? Because you never
expensive money.
It really is. I mean, it's 30%, and then it's not even a simple interest, right? It's a compounded daily interest, and a lot of people don't realize that a credit card is a variable interest rate. It's tied in an index that's tied into it's all bad, right?
Oh boy,
yeah, it's all bad. But see, we're desensitized to that, right? Because they tell us, oh, put it on credit, and then you charge it, you pay it. And you don't think that you're being charged the interest really, or it's not that big of a deal because you don't see it. Now let's flip the script. Let's say you had a $3,000 balance on a credit card, and whatever your monthly interest was for that, they charged to your billing cycle.
Aye.
Then you'd feel it, right? You'd be like, wait a minute. And some credit cards do that nowadays, which I think is good because it's a deterrent, right? You start seeing that interest, you're like, wait a minute.
I don't like that.
Good.
I don't like that at all.
No, you can keep that.
So I got a quick question. So, like, let's say you open up, because I see this a lot, and a lot of my friends, and even myself, when you start a credit line, revolving one, they give you like 12, 18 months, no interest.
Depending.
Okay. So, is it really no interest? Like, it won't affect your credit line? Like, because I see my friends, they run up their credit and they start paying it slowly in the 18 months. And they're like, well, I'm not paying no interest, so I'm just going to, you know, slowly pay it off or pay it off real quick.
Right. Yeah. No, it's they don't charge. That is true, but there's caveats to that. You know what I mean? There's things that come into play, such as they want you to make equal payments. So you take whatever the balance is divided by whatever your interest only or your no interest period
18
is.
months.
18 months, 12 months. They'll divide whatever your charge is by that 18 months to ensure that you're going to pay it off. However, if you have one late payment, they usually charge you back to day one at the full interest rate on the entire balance. Let me say that again.
Oh boy.
Let me say that again.
Repeat.
So let's say you were at Ashley Furniture and you got $4,000 in furniture. 12 months, no interest, right?
Yep.
Special promotion. Because I used to sell, in retail stores. That was a common closing tactic I used to use. Hey, I got this 48 months, no interest.
Yeah.
But
you see that guy walking up to you, man, you know, hey, he know all the tricks and all the loops.
Out.
When I see a salesman walking up, bro, no.
Time out,
brother.
Don't worry about it.
I just want to say hi.
Yeah, nah, you don't. No, I walked in looking like a dollar sign.
Cha-ching, cha-ching. So
just like that.
So how that works is you went to Ashley's. You have a $4,000 balance. You divide that by 12 months. Now, let's say you got 2 months into it. You didn't pay your third month, right? You forgot, whatever. It was on automatic payment. Whatever happened, you weren't able to pay it. They're gonna say the effective. You still have an effective interest rate on that trade line. It's just interest free for a certain period,
yes.
But if you don't pay, the effective interest rate's normally 21 to 30%, depending on where you're at.
That fine print, that little bitty text,
stuff you need a magnifying glass to read.
Yeah, that's in there.
So they'll charge you back to day one. So I think even better. I'm sorry. Let me go a little further in that chain. Let's say you were 6 months into it. That's actually better analogy. 6 months into it, 7th month you didn't pay it. Let's say you had $3,600 left to pay on. They're going to charge you 20% interest on $3,600 all the way back to the first day. First day that you took the furniture.
What?
Yeah.
Why?
Because you didn't pay. You had a promissory note. When you signed that piece of paper, when you signed your signature, you promised to have that paid within the interest only period. And again,
even if like let's say the following month, the 8th month, you pay on time and everything.
No. As soon as you miss a payment, you voided that contract.
Wow.
I want my money.
No more. I don't trust you.
I want my money.
I want my money.
You lied.
You
lied. Yeah. And that's a lot of common people don't understand that. Like you don't just get to make the 4% minimum payment. No.
Yeah.
You got to take the 4,000 divided by 12, divided by 18, and that's the payment you need to make, right? If not more, right? But revolving, and that's a trap, like furniture loans, even though you're buying personal property, and that'll get confusing like when we start talking about a little bit of the terminology, because you'll be like, wait a minute, isn't furniture like something I can put in my house and wouldn't have a lien against it? No, it's because the personal guarantee is just Wilson himself, is just Anthony on a unsecured credit, and we'll talk about what the difference is in unsecured and secured is as well. But it's pretty self-explanatory. But I do want to go back to the revolving trade lines is your gospel. That is how your credit is, the game of credit is played. And there's three fundamentals. I don't care what anybody else tells you. I'm not saying what they're saying is wrong. I'm just saying that, I've been involved with over probably 600-700 people over my lifetime that I've coached and helped through credit. I'm not a financial advisor or anything like that, and this is definitely not financial advice. And but I have, quite a few people that I've helped over the years that can attest to this working, right? So 3 golden rules. The first golden rule is the types of trade lines, right? Now, you have installment and you have revolving. Now, installments to me, they really don't matter. I really don't care about installments. We're not even going to really touch on that or focus on it. It's revolving. So revolving trade lines, you want to have at least 2 of them. At least 2. Really no more than, 3 is okay, but 2 is good, right? Now, a lot of the times when we are starting out on credit, if we applied, we're only going to get approved for $200-$300 at a time, right? Okay. And we are $300-$500, whatever it is. But those cards are a trap. Right, you have no history, no knowledge of how to maintain credit, and someone gives you a $500 credit line, and I guarantee you can talk to 90% of the people that will be watching or listening to this podcast. Their first credit card was a jewelry card or like Sears or someplace like that. And what's the first thing you did? You maxed it out.
Baby, I got you some new earrings.
Maxed it out.
The big boy joint.
Right?
This ain't Kim Zirconia, this and that.
Right? And then you start making payments on it, and we're making minimum payments because we ain't got that kind of scratch. We're pretty young, right? We start making minimum payments on it. We don't see it going nowhere. We're like, wait a minute, it's for the birds. And you're so young and ignorant, you just stop paying it. You're like, man, this is for the birds, and why would I do this? So it's a trap. That's how they kind of get you, suck you in. and they kind of get you and suck you in. So at the end of the day, revolving trade lines, 2, no more usually than 2 at a time. And the next question would probably be, well, then how would I increase my limit on those trade lines if I'm just starting out? How do I do that? And so how you do that is there's unsecured and secured trade lines. A secured trade line just means it's secured by money or real property. Example, I give the bank $1,500. They give me a credit line for $1,500. If I don't pay them, they keep my money. Unsecured is I'm trusting you. I'm trusting you, right? You told me, I looked at your paperwork. This is how much money you make. And the crazy thing about credit, too, is when's the last time your income was verified? When was the last time your income was verified on a credit application?
I don't remember.
Hey, that's on them. You know what I mean?
That is on them. That is on them.
$250,000 and they don't call me back. That's on you, dog.
I'm not saying it's okay, but I understand. But you see where I'm going with that, right?
Yeah.
So remember that when you're filling out a credit application, they're not verifying your income more than likely, unless you're asking for some stupid limit, but most of us are not. So there's no sense in getting an unsecured credit card in the beginning unless you're really young. There's really no sense in getting an unsecured credit card for $500 in the beginning because you'll more than likely get trapped into that, right? So once you max that card out, it's kind of just going to perpetually stay that way unless you're making quite a bit of money, but not a lot of people are right now. So what you want to do is save up your money. Save up your money. Stop going to, cut back Starbucks. Don't cut out 5 days a week. Just cut out 1 day a week. If you eat out 5 days a week, don't cut out 5 days a week. Cut back 1 day a week. For instance, Starbucks, it's usually averages $6 per drink or whatever it is when you go to Starbucks. If you cut that back 1 day a week, that's $24 a month that you would save, right? So you would take that $24 and apply it towards that credit card as an extra payment. Not like, let me include this, I got some free money. No, make your normal payment on that credit card and then make that extra $24. But anyway, same principle, save that money, that little $24, whatever it is, until you get to at least $1,000. The magic number is 1,500. And the reason why I say this is look, okay, if you have a $300 credit card and that's all you're making that's all you have history of making payments on is a $300 credit card, that's all you're going to get. You have no buying power really.
Right.
So when you go in, and it could be 12 months, 24 months you've been paying on that credit card.
Yeah.
You got a 720 FICO score now. You roll into Ashley Furniture because you just bought you a house and they denied you. And you're like, wait a minute, I got 720. My credit score. You have no buying power.
Rent-A-Center. That's where you go.
No, don't do that. Please don't go to Rent-A-Center, guys. Don't. You talk about a trap.
Next stop, Rent-A-Center.
There's other alternatives.
We getting this couch.
Right now. We want to pay $300, $400 a week for it, but we good.
What?
We
My
good.
cousin, he had like a 32-inch TV. He said, yeah, it's only $75 a week. I said, $75 a week. You could buy the TV for $200 at Walmart.
Exactly. See, again, and this is all like this is the behavior that we're talking about right now. Like that we're gonna shed that light. We got to do better, people.
Way better.
We gotta stop doing this. But you know what? The reason why we do it is because we're ignorant.
Yeah.
We don't educate ourselves to know how to really practically apply. Right? We might watch a YouTube video or research some stuff on the internet, but we don't learn how to put these tools into place for us. Going back to the 3 rules.
Question.
Yes, sir.
How many trade lines is a good amount to have on your credit report?
2.
Two.
I mean, you can have as many as you want,
Listen,
right?
bro.
But you gotta learn how to maintain that. So let's rewind a bit and go back to the revolving trade lines that we were talking about, right? So if you have that $300 trade line, as we talked about, you're not going to get any buying power, right? And then not to mention that your credit score will stagnate, meaning just kind of remain the same, because when you first add the trade line to your credit report, of course you'll see a boost because you didn't have any credit.
Yeah.
There was nothing to grade, But as soon as you have that $400 trade line, you'll see your credit score shoot up. And then as you maintain it, let's say, for instance, if you charged it $100, right? you'll see it increase a little bit more. And then it'll stagnate. It'll just kind of remain the same. And then you could do that for 2, 4, 5 years. You know what I mean? And it's not going to get any better. So it comes back to the buying power. So at least $1,000 you save up. Then you go to Capital One. Oh, and be sure that you're looking and checking to see if they have any yearly fees
on the credit card.
Said credit card. Because a lot of these companies like First Premier, y'all know who First Premier is, some of y'all out there, pretty dirty, Merrick Bank, Credit One, they're very useful tools, but they all have abnormally high fees that they charge you annually, some of them even monthly, to maintain the card, to report to credit, to do all that kind of stuff. So Capital One, some of your bigger boys. But anyways, even your bank, go into any of your bank, Chase, Wells Fargo, Bank of America, with your $1,000 and say, hey, I would like to get a secured credit card. And they'll open up a secured credit card for you, okay, from your bank if you feel comfortable with that. So let me go to this. So now, first golden rule, no more than 2 revolving trade lines at a time with limits of at least $1,000 or more. The higher the limit, the more impact it has on your credit score.
Got you.
Higher the limit, the more impact it has on your credit score. So if you got a $4,000 limit, your FICO is going to swing 30 to 40 basis points at a time, positively or negatively, depending on how you're managing that card. That segues into the second golden rule, which is credit utilization. If you don't hear anything else I'm saying through whatever podcast we do, this is the one that you want to listen to, is credit utilization. Okay? A lot of people will tell you 30% is the magic number. And what I mean by 30% is balance versus limit staying consistently at 30%. So naturally, if you had a $1,000 credit card, that's a $300 limit, right? That's fine. That's gonna help you, and it's definitely gonna be a benefit. But the magic number when you are trying to maximize your credit score is 15%.
Oh,
15%.
Really?
You don't want the balance versus limit to be any higher than 15%. Another example: if you have a $1,000 credit card, that balance should never be above $150. Okay. Now,
oh boy.
Don't when you're trying to optimize your credit score, do not buy something and pay it off. Buy something and pay it off. Because when you do that, there's no utilization. You're not ever giving it time to report to the credit, to that particular trade line. Let's say Capital One. All credit cards, all financial institutions have a certain day a month that they submit all the information to Equifax, TransUnion, and Experian. Those are the 3 credit bureaus for anybody who doesn't know. TransUnion, Equifax, and Experian. So usually around the 23rd of the month, the 20th to the 23rd is when they'll report all that information to the bureaus. And the reason why I'm bringing this up is if you're paying it off every month, then it's never showing any payment. It's never showing any utilization. It's never showing any balance. Now, each one of these bureaus use an algorithm, a software to grade your credit. It's not a person sitting down grading your credit. It's just an algorithm. And so the algorithms are the robot, the artificial intelligence.
Mathematical formula.
Exactly. The artificial, whatever you want to call it, just a computer basically deciding, what your credit is and isn't, And so if the tools that we're giving you are going to be the tools that you can implement to play this game with the system to optimize your score. So what you want to do is, let's say you had a $1,000 credit card, you charge it $150. You want to make minimum payments on it for 1 to 2 months. Monitor your credit, then pay it off. And why I say monitor your credit is because if it's already where let's say you're in month 1, you charged it, you made your first payment. If your credit score is where you need it to be to buy whatever it is you're looking to buy, go back to zero. Go back to zero. Because why would you pay money on interest, on money unnecessarily, right? Because the longer you leave that balance sitting there, the more money it's going to cost you, right? So when you're not looking to optimize your score, making it as best as it can possibly be, buy something and pay it off. no sense in paying interest on that. But if you're trying to opt, I know this sounds crazy to a lot of people. It's got to. But
mind blowing.
It is. But that's where the discipline comes in, though.
Yeah.
We gotta have the discipline, our self-discipline, to be like, okay, let me inch into this and develop a system that works for me, so then I know how to maintain it. Because what happens is it gets out of hand real quick, right? And we're the type of creatures, right? We could be out with the family at Disneyland, right? We could have $300 in our pocket. But we go buy that turkey leg or whatever from Disneyland. Guess what's coming out? The card. The card. Yeah. We want that cash in our pocket.
Yeah.
Yep.
But we have the best intentions in the world. I get paid this Friday. I'm going to go ahead and knock that out. But guess what? Tire blows, whatever. Something happens. Kids need this, whatever it is, intentions. And that's where we have to really discipline ourselves, is to get into a system that works for us so we become autonomous. I mean, just like robots in a way doing that, right? Because if you really think about driving, I'm going to use this analogy. Driving is highly underrated because there's a lot of stuff going on with our brain as we're moving through traffic, but we're so used to it that we don't even think about it, right? You're thinking about, you're singing the song on the radio, thinking about what your kids did yesterday, thinking about this boss you got to go to and cuss out when you get into work, or you're going to be cussed out, one of the two. But there's a lot. You're still scanning for everybody, looking for wrecks and everything else. But why I bring that up is it takes a tremendous amount of resources from us internally, mentally, to drive. But our bodies are so conditioned for it, we don't think twice about it. We're almost on autopilot, when we're driving. Have you guys ever just been zoned out while you're driving? Like you done drove 40 miles?
Yeah.
and just
going up down the hill.
Yes.
And realize, wait a minute, how did I get here?
Yeah.
How did I get here?
Get in trouble.
Because you're thinking about everything in the world. You're not saying that I advocate that, but everybody does it.
Now we are coming up to the end of this episode, you guys. James, this has been phenomenal. You know what I mean? And there's so much more to come.
There really is.
I want you to let the viewers know what they have to look out for with the next upcoming episodes. Our episode, you know what I mean, before we get out of here.
Absolutely. Well, for Future Focus, all these episodes we're going to be meeting with different ethnicities and going over their experiences and talking to them about, what their first experience was with credit and how they're maintaining it today and why it's important, and then how they can use these further tools to take themselves to the next level. Maybe you want to be an entrepreneur. Maybe you want to get better interest rate on your property. Whatever the situation is, we're going to make sure that we lay out everything for you guys and give you the proper tools so you can make informed decisions and finally be financially free from these credit cards and everything else in this world, boy, I tell you what. And then we're going to start with the 3 fundamentals again next time. I apologize, I didn't get to the last third.
Man, we were having so much fun in here. We it's our job to detour James
That's
from
it.
getting into the nerdiness of what the financials can be. But it is very important, man, and that's why we are all here today and why we are all going to continue to be here for us and also you guys. You know what I mean?
100%.
James has so much knowledge and he wants to help. You know what I mean? And we are here to assist him in that. So hopefully you guys continue to follow along with the Future Focus podcast. I'm your man, Anthony Smith.
Wilson.
James Lowry.
Wilson right here.
Sorry, Wilson.
Yeah, no worries.
Sorry, James Lowry.
We're going to get it right. We're going to get it right.
Don't worry about that.
But we'll see you guys next week, man. Future Focus podcast. Remember that. We'll see you guys next week.
Peace, guys. Appreciate you.